So welcome everybody to this session of the World Investment Forum focused on impact investing in emerging markets. We're very pleased to have with us today Paul Clements-Hunt, the CEO of Blended Capital, who has organized this session. Paul is formerly the head of UNEP Finance Initiative. Has been with the UN, with the UN for many years, and is a great partner and friend of UNCTAD and its efforts to drive investment in emerging markets to achieve these sustainable development goals. So I'm not going to have a long introduction here, but I just wanted to welcome everybody to the World Investment Forum. We have a number of sessions this week. I think this, to me, is one of the more important sessions because it really cuts right to the edge of the question of how do we drive investment into emerging markets for sustainable development. In my own work, I'm constantly meeting with investors who seek to invest in these sustainable development goals. And one of the first questions I often ask them is, what are you doing to invest in Africa? And that's when they will pause for a moment and say, oh, well, we don't invest there. And I say, well, if you're not investing there, you're not really investing in the sustainable development goals. And that's true for a lot of emerging markets. So the topics you're covering today are critically important. Now, there's a reason why a lot of investors don't invest in emerging markets. There are real challenges. And those are some of the things that you're going to have to tackle in the session. And we certainly look forward to hearing that. I would also say to the viewers that this session builds on an earlier World Investment Forum satellite session that we hosted earlier this year, that Paul, again, organized this collection of experts. And we heard more about the declaration that they put together. And I'm sure we're going to hear more about that today. So with that introduction, Paul, I'd like to hand off to you.
Anthony, thank you very, very much. We're going to jump straight into it. So I'm Paul Clements-Hunt. Thank you for the introduction. And I'm going to make the session real out of the gate by telling you that my background is 1960s wallpaper in Liverpool, UK. I'm currently in my mother's home rather than my normal home, which is Nairobi. So I'm grounding the session in reality before we even begin. Let me give some context. So look, we've got 2 hours, we've got 2 sessions. The overall theme is emerging market impact at scale, and we've divided it in 2. With no compunction, panel 1 is women driving emerging market impact at scale. We've got an amazing panel of entrepreneurs, investors, entrepreneurs, however you mix it. And we cover India, we cover South Africa, we cover Brazil, and we've got more input besides. That's panel 1. Panel 2 is we're going to deep dive and we're going to have a look at the way the legal world can influence and drive impact and accelerate global impact. So that's a focus very much on the legal community. Now, let me give you context of why we're here today. The process started with a simple conversation with the UN in South Africa in March of 2020, just as COVID was beginning to hit the continent. And all the devastating impacts, whether social, health, economic, that had. That started a conversation around how does the business community in South Africa, in the SADC region, in Africa, globally, how do investors play a more effective role? So already we were beginning to think that, we didn't know the nature of the challenge, but at some point we were hoping we would come out of it. And what role could business play? I won't go into fine detail. We've had 12 hours of sessions over the course of more than a year, all recorded. It's been anchored by the relentless and inspiring Judge Professor Mervyn King from South Africa, and also Professor Paul Watchman, who will join us for the second panel. And I can only thank them for what they've done. Let me stop there. It's not a set of presentations. This is a conversation. It will be hybrid. I'll ask each of the speakers to keep nominally to time, 5, 6, 7 minutes, a bit of Q&A. I'm a bit of a brutal moderator. I will interrupt, and we will have no marketing. We know that. There is no marketing on these sessions. So all joking aside, Anthony, thank you to the UNCTAD team. Let's jump in and let's kick off with the role of women leaders in driving sustainability in the emerging markets. And I'm delighted to hand the good Lord, we're on time. That's fantastic. I'm delighted to hand the baton to both an inspiring investor and financier who will not forgive me for saying that she was and perhaps is still known as the mother of private equity in India, We've had a long association, and Achana Hingarani, who's the founder and CEO of Sienna Capital, will provide the Indian perspective, a really interesting, edgy investment fund that looks at the conflagration or the integration between science, artificial intelligence, machine learning, and sustainability impact across numerous sectors. So Achana, what are you seeing? What are you feeling? How can you drive sustainability more effectively in this post-COVID pandemic? Over to you for 6-7 minutes and maybe some interruptions. Achana, the floor is yours. Thank you.
Thank you, Paul. Pleasure to be here. Good afternoon, everybody. So Paul is right. I'm harking back to 4 or 5 years ago when, based on all the collective wisdom that I gained from running investments with large institutional houses, I was trying to see what could be the next area for me to focus on. And I came to a conclusion that with businesses changing very rapidly, mind you, this is 2016, technology would play a very important role, but equally based on our own experience on the ground of, if you were to introduce SDG goals or ESG goals, whichever way you want to look at it, I think that could, in our thesis, it would have been a lethal combination. But this was 2016 and it was very difficult to ask people to focus on what we were trying to say and build a convincing argument. But if you hark back or look back to where we are today post-pandemic, incorporating technology into our everyday lives, as well as many businesses, has become powerful. Of course, everybody is trying to figure out what part of their business can sort of be aligned with technology, and we've been equally pushing to see if we can add that a more important goal of impact, because easily, if you take any of the UN SDGs, I think every company that's restarting or reinventing itself can easily incorporate these ideas into the kind of things that would allow not only for impact at scale, but it would also allow them to grow much faster.
Achana, can I interrupt you for just a second?
Yes, sure.
Look, I think it's maybe worthwhile spending 30 seconds on your own sustainability journey. Because I remember conversations when you said, back in the early noughties, it wasn't, if it wasn't on your horizon, it wasn't embedded in your DNA. But you've been through, you've managed huge amounts of money in some very big institutions, and you started your own company. And you have arrived at a point where you have really embedded impact and sustainability in the offering. It's a mainstream offering. So give me 30 seconds. Why? Why did you come across?
Well, so I thank my larger, more busy investors who pushed me to represent them with Paul on UNEP F5A back in 2005-6, if I remember correctly. And at that time, I was very hesitant to do it because A, India didn't have that kind of experience, and B, my exposure while it was there was limited. But over the years, learning from those panels, as well as incorporating those practices into a large institution, which itself, was resisted that change, I saw that as soon as we implemented it, even the entrepreneurs who, again, resisted the change saw the difference and the value creation. So there are two aspects to it. A, of course, it's good for, the world, the environment, etc. But more importantly, if you do it correctly, it's also good for the entrepreneur in creating the right, good hygiene, but great value too, because I think even if you look at listed companies, if they have these goals set correctly, they do see improved value. And both of those were visible to me over the last, I'd say, 10 odd years. And I thought that incorporating that as if it was normal to think about it, which many people sort of could not understand why I was saying that. Today, I think if you look at any pitch, it's suddenly as if it was something that they've been doing for years. It's just, maybe it's an afterthought, but even that's good because, then everybody starts thinking in the same manner. So that's where I was coming from when I put it together. But if you look at it from the question is, can you take it to scale, right? So there are two instances, at least in the Indian context, where you would say that while it started as an experiment, microfinance is one area where, we were able to show impact at scale. It did not need too much technology. It did not need too much investment. There were a lot of pluses to it. You were able to access, provide capital for really, really disadvantaged sections of society. And forget about being disadvantaged, you just sort of saw the transformation. It was very similar, at least in the Indian context, the microfinance sector was similar in creating creating capabilities with the lower sections of the economy in becoming at least 2 steps above where they were. Very similar to how the cell phone transformed India. I mean, we can say whatever we want, each one of us has a cell phone, but importantly for India, every individual from every section of society today has a cell phone. And it's not because, it's glamorous to do so, but it's a very important business tool. So just taking that example and using it on microfinance, we had a lot of hiccups initially, because cost of capital is very high. Some people thought it was usurious. Regulations came in a bit later, but today, if you look at it and see how many companies have succeeded, and even similar models have now prevailed in Africa as well as other emerging markets, you see that it has had a great impact at scale, which was sort of not, visible, let's say 4 or 5 years ago. When you thought about impact, you thought about them as small experiments. Especially, I've seen many such examples in India. People start off on a small scale, give some capital, see how it goes. But after that, it sort of fizzles out because there is no ability to carry it to larger parts of the economy, right? That's one story about impact. But let's come to today. About 2 years ago, again, as I said, nobody was listening to anything that you said about how technology was going to become so important, right? But you see the health sector, it has been the greatest beneficiary in the last 2 years for everybody worldwide, including emerging markets, where many companies which were on that track of providing online diagnostics, medical facilities, access, medication, etc., have flourished, all because of using either some level of AI machine learning for diagnostics, or using technology to access and provide capital, as well as provide services to larger sections of society. The third good example, we struggled very hard, at least I struggled very hard in 15 years ago to find anything that I could do in investing in let's say, non-urban markets, including areas like agriculture. Today, it is a poster boy especially for emerging markets and India. You look at the way technology has been able to help not only farmers improve yield, provide better nutrition type of solutions for better crop, etc. You also have capacities to give them better pricing, bring them in at the right value, and all of this because of technology. But look at all 3 examples that I've given are all about impact at scale. So it is, sorry, go ahead.
Chana, as you take your story, whether it's domestically in India, and you're a fund, so you're looking for asset owners, for investors, or you take it internationally, whether that's in the European or whatever context, broader Asia, European, US.
Sure.
Are you finding much more receptivity to the fact that you've got sustainability and perhaps offerings across the socioeconomic spectrum built into the offering? Are you finding the large investors more receptive? Not just more receptive, are they looking for that as part of their, as part of their investment allocation? The whole ESG thing, are they looking for that more directly?
So I think the larger investors definitely are looking for that. And I see, in the private world, it is a little bit more, it's more about being able to access the right kind of investors and explaining to them what you're doing. But if you leave aside what I'm doing, and if you just look at the Indian listed markets, right, till about 5 years ago, nobody was focusing on whether the companies that they were investing in had any tick in the box for impact or ESG. But you see the last 2 years, the amount of money that has flown into the Indian capital markets, which has a strong component of impact and ESG, is compelling enough to tell you that even on the private side, if we were to go to enlightened investors, or forget even enlightened, even otherwise normal investors have started to ask that question very, very nicely as to what are you doing about that aspect. So yes, people are looking for it for sure.
John, a final question from me and a brief answer. But we can't say post-COVID era, But as we progress through COVID, through the different stages in different countries and different regions, I mean, you know, the way I internalize what you've described is, yes, there's AI, yes, there's machine learning, yes, there's science, but there's a really distributed component of what you're offering, isn't it? It can touch anyone, anywhere, whether it's in agri or health or education. How important is that in terms of the build back post-COVID, where we know that the last mile and the marginalized communities have suffered worse than anybody else? How important is that mobile, distributed approach in your mind as an investor?
So it is, you know, one of the nice parts about, you know, blending technology, AI, ML, impact, everything together and trying to see what you can do at those intersections is the great part about that story is that they're all globally applicable. So many of the businesses that we have invested in, while they may have been India focused, some of them are already, you know, globally in demand. So from that perspective, reaching last mile, either through technology, sometimes it's not necessary that technology is the be all. You may have to have some physical connectivity with you know, the less initiated from a technology perspective. But I think a blend of all these aspects does allow for greater access as well as global relevance.
Well, Chana, listen, I can only thank you. One great memory of you is walking along the banks of Geneva on a freezing cold winter autumnal afternoon as Archana was bringing sustainability in India to a range of investors in Switzerland. And I mean, you know, you've been through an incredible journey, but the fund that you're now bringing to the market, it has sustainability in the DNA, is wonderful, and more strength to your arm. That might have sounded like marketing. It's not. You're doing an incredible job. I'm going to move on, and we're going to move, I guess, if my compass is right, we're moving, it would be southwest to South Africa. And a dear friend for a long time, Karen Ayrton, who hides behind this sustainability consultant title, but in terms of someone who's got immense experience in and around finance, capital markets, mining, you name it, advising the Treasury. I think you've just had a report out for the South African Treasury, or at least it's been rebooted and all those things. Karen, you have an incredible track record, and I think a better insight, both in terms of South Africa, the Pan-African context, and internationally than most people I know. So we'd love to hear, how are we going to scale the impact, and how, as a woman leader in that sector, do you see it in South Africa? Karen, the floor is yours. Over to you.
Thank you, Paul, and thanks for the opportunity. As you know, this is the topic of my passion, so being able to chat to a range of world leaders is great on this. I think the issue on sustainability and investing for impact has come a long way in Africa, and we are suddenly starting to see a range of financial institutions starting to address this, starting to get traction and trying to get momentum. You just referred to the National Treasury project. This past week, the South African National Treasury published a paper, a technical paper on financing a sustainable economy. And really what that paper is looking to do is to get the momentum going, to get the financial sector to understand that, for example, climate change, which is the primary focus of the paper, is an economic issue. It's not an environmental issue. It's not something that's different. It's an issue that impacts everybody across the piece. It impacts in the ability to deliver economic value and sustain economic value and development. And unless we address it with gusto, more people are going to be left behind and impoverished, particularly in Africa with its very large land mass and its huge vulnerability to climate change. So that has been a lot of my focus in the recent past. But I think if one looks back at issues such as education, as water, a whole range of SDG related issues, the South African market and the African market are starting to look at those issues as focal points. A couple of things creep in that start to sort of break the momentum or hinder the uptake. And one is regulatory uncertainty. We live in a world where investors are very nervous of going down a track and then having the rules changed on them. So regulatory uncertainty has played a role. We saw that a number of years ago when, with great vigor, we launched a renewable energy project in South Africa to bring independent power producers to the market. Subsidiary industries for manufacture, assembly, et cetera, of renewable energy plant was established. But then the momentum from the procurers of energy fell apart. And with that, some of those fledgling industries also fell apart. We're now at a point where we're trying to get those going again, and we have to start almost from scratch. So regulatory certainty is a major, major issue. And I think the other thing is that we need to better tell the story of how these SDG impacts are not just around water, they're around water and people, water and agriculture, water and economic growth, water and development. And every one of those SDG issues is so intertwined with economic well-being within countries that we need to stop thinking of them as something apart and thinking of them as major points of driving economies forward in a way that takes the group of people, the mass with them.
So Carrie, they're not technocratic. They're very much about community and community embedded in nature. I think that's a really important message for the UN in terms of the SDGs. It's almost intuitive and read that they're connected to communities and people, but maybe that needs to be spelt out more so that communities can see the relevance of SDGs to them. Back to you.
Absolutely. And I think the other lesson we've learned, Paul, is that to begin with, a number of businesses struggled with the indicators under the SDGs because they were formulated for governance. And so there's been a process of having to understand how that impacts an individual business or a sector. And that work, I think, has now matured, and we're starting to get a much better grasp of where the various parts of the financial sector, for example, can play a role. So there have been some really important lessons there. And, I think that some of those cross-cutting themes, or they're all kind of cross-cutting themes, but some of the cross-cutting themes around empowerment of women and bringing communities along are certainly absolutely critical. And I think certainly in the African experience, the emergence of more women in leadership positions, on boards, in executive, in the C-suite, et cetera, is certainly helping to bring about a new energy. It's not changing the world. They're not coming with wild ideas, but they are bringing a new energy and a new sense of purpose. And I think that's critically important in terms of achieving the SDGs. But I think that the lesson that we have to take from that is one woman on a board is not enough. One woman cannot represent 50% of the population. You have to have a critical mass in all of these things. And I think the other point that for me in terms of diversity in the investment space is we have a lot of focus around, do we have enough accountants and people who understand the money, et cetera, but we don't have enough sustainability professionals or environmentally literate individuals or socially literate individuals on many of those structures. And we need to think of diversity and inclusion as being diversity of thinking as much as of one of these and two of that type of approach. And I think that if we do that, and if we continue to pursue that with vigor, we will open up the investment space. I mean, and I think another point in terms of that is we are getting to that point where blended finance is the only answer. And we need to understand that piece much more clearly. We need to understand the appetite from governments to work in partnerships, the appetites of the financial sector to work in partnerships for the long term, for bringing that ability to harness different forms of capital into solving a particular problem.
Carrie, let me jump in. One last question. and a brief answer from yourself. I mean, the points you're making are so fundamental, so important. But look, on the blended capital, blended finance side, I mean, I'm a big advocate of the fact that we need to blend more aggressively. We need to look along the entire investment chain. It's not just public first loss, or create the market for private finance and they come in. You know, it needs to be every hue and color along the investment chain in terms of that appetite for risk and reward. And we need to blend. Now, the finance sector has no shortage of brains. That's clear. You know, we only have to look back to fancy derivative structures and the CDOs that brought the world to their feet. But the ability to blend more aggressively and more creatively, do you think that's an important part of the future piece in terms of reaching the last mile, reaching last mile entrepreneurs, all of those things?
Well, yes, certainly. And I think that the where one sees that, I mean, you talked about the first loss risk factor, that remains important. I mean, you know, unless there is a kind of guarantee that government's not going to change its mind midstream, you don't get that investment. But there is a need at every level to see both that blending of intention and finance capability, but also to get to the point where it's not just the quants working in a back room kind of doing some magic, but really working alongside a whole range of people to solve the kind of big problems. Another of the hindrances that we do need to get over is that many of these big issues are seen as sort of almost too big for an individual finance house. So how do we break it down into the kinds of projects, the kinds of approaches with government support and with the local government in particular, kind of working alongside the private sector to resolve some of these issues?
So that sub-sovereign piece is really important. It's just not about the center, it's move it out. Karen, thank you very much indeed for your comments, and we will definitely come back in the Q&A session. We're moving rapidly west. Is it west? Yes, west to Brazil. And I'm really delighted to have Teresa Venaglia, who's the CEO of BRK Ambiental, I think headquartered in Sao Paulo. I should know that. But look, it is one of my favorite corporate stories anywhere. I won't try to tell it. I think it's an amazing journey that you've been on the past 5-6 years. I mean, I know Louise Meyer, who's on the next panel, has been involved in that. But in terms of the way you've, for a big sanitation and water company, embedding sustainability in the way that you have is a remarkable story. So Teresa, we're delighted to have you with you. We're delighted to be in Latin America now. And the floor is yours. Thank you for joining us.
Oh, thank you for inviting me. It's also a pleasure to be with you. So it's very nice to be here. And yes, so as a company that's leading the water service, you can imagine for a while that using masks, social distancing, and especially washing our hands with soap and water were the primary tool to at our disposal to stem the virus from spreading. So we can imagine the challenge in a country where most of the people still do not have access to the service. So the experience leading this type of a service under this environment is being very, very, very challenging. And if I could say what was positive on all these scenario about the pandemic, the positive takeaway of the situation was that the Congress successfully passed a landmark regulatory framework late in June 2020, which is a very important point because allows more investment, private investments to overcome the challenge we have was that 0.5% of the population still do not have access to sewage and 35 million people still do not have access to water in a country which is among the 10th largest economy in the world. So, and the pandemic helped to pass this law at the Congress, and as leading a company with a so basic service, we were very engaged on that, and we already seen the benefits of that. But at the same time, why we were working overtime to get or to be engaged on this new law, we are also hyper vigilant and aware of the need to guarantee our employees safety, continue the water and the sewage service for the population, and of course the corporate liquidity. And I would say that we succeed on that because we have people that were engaged and worked very fast on the three pillars, where we accelerated the digital transformation. We invest on the reducing water losses. Almost 10 billion liters of water was saved during this period, while we invest in expanding the grid and to have more families connected to the service. What was a challenge, because at the same time we were talking about the liquidity of the company, but we succeed on that. And it's not possible to do all the things that we do not consider that most of our customers are low-income communities. So we need also to expand our social view, our social initiative throughout Brazil, and form the partnerships with other companies in order to guarantee the scale of our initiatives, but also how fast we can move on and really touch this community. So we had we sponsored programs with very famous institutes, as Arito Sena, where we're training 40,000 teachers all over the country in social and emotional skills, which is key at this moment when our children are back into the school, as we are having more controlled impact of the COVID, and supporting the vaccine, the movements that were raised by the society to supply healthcare systems to and the materials to support the vaccination all over Brazil. So
let me ask you a question, right? You know, you have a regulation moved in the middle or the beginnings of a pandemic, which, you know, simplifying it, that becomes a requirement that you have to provide sanitation and water services wherever it is in the socioeconomic setting. That, you know, the fiscal situation is tough. The business situation is tough. The fact that you have embedded sustainability thinking in the company, was that a strength in terms of your own staff's resilience? And I mean, as I understand it, I think if my homework's correct, you serve somewhere in the region of 18 million people, I guess mainly through municipal contracts around Brazil, but also obviously serving the corporate sector as well. At any point in this really challenging period, as a CEO, did you have the thought, we can't manage, we can't do this? Or was it positive energy off the back of the mission? It's a difficult question. It's unanswerable. But you've been through a very, very tough time, and so have your staff. How have you survived?
Well, I think that the size of our enthusiasm is the same size of the challenge.
Okay.
And the belief that we can make the difference and handle a business where we can add value for the stakeholder. But more than that, it's a purpose business where we really add value to the communities. So in the middle of this crisis and the challenge of living with almost 200 municipalities, with different perspectives in terms of the benefit of sanitation from the political standpoint, was that the pipelines are underground. It's an impact on the mobility and after the investment, a bill arrives to be paid. So from the political standpoint, when you think in the short period of time, it's very challenging. So I think that once that we believe on the benefit of the service, we are being very intensive in communicating to these communities and to show the benefits, but also help them to get the benefit that end of the day will mean bill at the end of the month. So how we can do that? How can we get the social license to operate and deliver the service, and to show to the political environment that, yes, you can get votes investing on sanitation. So this is the size of the challenge. It's very exciting to see after 4 years running a BRK that we are succeeding on that. It's a matter of resilience, belief, focus, and discipline, and support from stakeholders for sure. And I would say that diversity, programs that generate the income, have the view of the importance of social programs in that communities, and each community has its specific demands. And one thing that I learned, that we cannot do it alone. We need to have partners, like microcredit for low-income communities that needed to pay to connect their homes to the sewage network. How they can do it if they do not have income? So we need to find a way.
Teresa, thank you for your comments. I'm just joining dots very quickly, but I'm taking from what Archana said in the Indian context as an Indian fund manager, Kareem with vast experience in different industries, finance, mining, and yourself, that in some ways there's a hidden resilience on the balance sheet for any company that has purpose, and that purpose is embedded in the staff. And that perhaps in the post, whenever we get to the post-COVID era, the idea of SDG 17, which I think should be SDG 1, partnership collaboration, is absolutely fundamental if we are to touch and reach those parts of the world or the communities where capital doesn't flow freely, and that's critical. So that idea of purpose is a real strength on the balance sheet. But look, thank you for your comments. We're now going to immediately fly back east in this wonderful Untitled platform, because we have 2 speakers from Africa. First of all, I'm delighted to introduce Dinao Lerutala, who's the managing partner at Maya Capital. And I know you work very closely with one of my dear old friends, John Oliphant at Third Way Investment Partners, who used to be at the government fund. But Dinao, your development, the development of Maya Capital, has been an incredible thing in terms of, a mainstream investor deciding to look at sustainability and impact and invest in that. And just before you come on, I would also like to tee up Faith Nikoroti, who's with Mwezi Solar in Kenya, who will come to as our final speaker to tell us an amazing story, or part of it, of a last mile business which is serving people in a wonderful way. But Dinao, over to you. The floor is yours. Feel free to pick up on comments of any of the women leaders who've gone before you here. Dinao, the floor is yours.
Thank you so much, Paul. Quite excited to be part of this panel. It's I think firstly I'm just enthused by the passion that all the ladies have, for impact investing. It definitely is a purpose-driven one. I grew up in the rural areas, and I've told the story a couple of times. My first couple of years, in fact, my first 2 years of schooling, we were studying under a tree because we didn't have enough classrooms at the school. But through quality education and what was then postal services, and today you can equate that to good quality ICT connectivity. Studying in a rural area, I was able to apply for a bursary in the cities, get accepted and go study, and eventually get my CFA charter out of the CFA Institute in the US. And, so if you look at all of that, at the time, a lot of those services were provided by government. But unfortunately, over the years, the quality of service coming from our government has been eroded. And that gap is now being filled by private markets and primarily, investors for sustainability and impact investors. So when I do the work that I do, which is to invest in education, healthcare, housing, financial inclusion, clean tech, and also promote gender inclusion, it's because I understand the role that it plays in really building an inclusive economy. And in South Africa, currently, we have all of those basic services very eroded. The quality is not anywhere near where it was 20 years ago. We're sitting with one of the highest inequalities in the world. And we're sitting with literally an existential threat to the sustainability and stability of the country, which we witnessed recently, unfortunately, with the July riots that we had, where, shopping centers and properties were being damaged by communities because of various reasons, but primarily due to, very poor socioeconomic living conditions that a lot of our population find themselves in. I think we have one of the highest youth unemployment rates as well. It's estimated to be at about 74%. So if you look at the role of SMEs in enabling a country such as South Africa and our neighboring country, Swaziland, to get out of that rut, to achieve the economic growth that we are anticipating, it is my firm belief that it can only come through impact investing. And it's been quite encouraging to see that increasingly in South Africa, we're starting to see a move towards supporting the private equity industry and the venture capital industry, which is where a lot of those solutions are coming out of. Whether you're looking for access to financial services for SMEs or access to energy, a lot of it is underpinned by access to financial services. And our SMEs are the ones that are driving the largest employment creation currently. And that can only be enhanced if we enable a lot more financial inclusion towards the SME economy. We have one of the most successful examples in the country of an organization called the Small Enterprise Foundation. It's been around for 23 years. It was built around the Grameen Bank model. It's been providing micro-lending solutions to women in the main. More than 90% of their clients are women in the rural areas. And, our accountant actually in the fund is a lady whose mother used to raise loans from the SEF. And you hear a lot of successful examples of women that have raised microloans through that entity that have been able to grow their small businesses and enable them to take their kids to school, who are today chartered accountants, engineers. So I think that there is a real case for impact investing because, if you look at financial inclusion as an example, it creates a very essential bridge between our rural economies and our cities and between informal and formal markets. And without that, we're not going to be able to solve South Africa's problems. And I firmly believe we cannot get the economic growth that we need, which also puts quite a huge threat. I think there was another article that came out recently that we're facing a real risk of the Arab Springs in South Africa, which is a reality, So if there was anything I could do with Karen, and listening to Achana speaking earlier, it would be to say, how can we fast track, all of the successful solutions that come out of impact investing, because we do need them.
You're ahead of me, because that group has already been created in my mind. If you don't mind me using the language, a powerful sisterhood. But I have a question for you, right? And I think the South African, Brazil, Indian link is so fundamental. What you're saying, the messages are there, that there's a systemic risk, social risk building in terms of the lack of basic service delivery, and that impact is part of the solution. But it's that word scale. Are you confident that given all the headlines and the column inches and the media play on ESG and sustainability, are you confident that we will see let's say, the systemization, the standardization, perhaps even the securitization of impact products that can deliver at scale and fill that, what has become that public-private gap? Are you confident that we're approaching that point, or how much hard work is it going to be?
Yeah, look, I mean, I think we definitely need a lot of hard work towards it, Paul, but we also have a lot of very successful examples. I mean, our private equity and venture capital industry is very matured. It has grown, and I think it's one of the most dominant ones in Africa. And that's where a lot of the solutions have been proven. There's a role for everyone to play as well. Government is currently looking at amending the regulations to the Pension Fund Act, which had a limit on the amount of pension fund investment that can go towards the unlisted market, which is where a lot of these solutions lie. That is being looked at currently to potentially triple that limit, which will then mean that we have a lot more capital that can go into the market, and that will allow the scaling that we need. And I think the point that Karen made earlier as well is valid, that some markets require blended capital. So there are certain markets where we can scale just with pure commercial funding, and there's certainly others where we can scale with blended capital. But I believe that the role of government in enabling that is quite important. So the regulation changes that we are anticipating are very much needed. And they definitely will be one of the key solutions that can help unlock it. On the other hand, impact investing is not just, a tree-hugging phenomenon, in my view. It's also a very viable economic opportunity. If you look at where the next frontier of opportunities lie, it is in impact investing. And I think that's why institutional investors in the case of South Africa are very keenly looking at, increasing the amount of capital that can flow into that space. So there are a lot of encouraging developments. I wish we could just pause the instabilities just so that we have enough time, to gain traction on the positives, so that we don't derail the good work that impact investing is doing and can do for South Africa. So I think there is a real business case for investing towards achieving the Sustainable Development Goals, which delivers very stable returns for our investors, while it also helps us to stabilize the country and build what can be a more inclusive economy. And that means sustainability for South Africa. And, where the model is replicated in Africa, certainly it means we can have a more sustainable continent as well. And that's what we can unlock the economy.
I'm just going to take that phrase, traction on the positive, and we just leave everything else behind, because I think that's an incredibly positive message, but grounded in reality. And look, one very quick question to you, because the clock is ticking here, and we've got other things to cover. We're going to move on to Faith next with an amazing story from Western Kenya. Can you remember the type of tree that you used to sit under?
No, not at all. I don't even know the name. I can't even remember the name of the tree.
But did it provide shade?
Look, it provided shade. I can't even tell you what happened when it rained, but I think the last parting shot from me would also be to say that it's been very encouraging, not only in South Africa, but globally, to see that a term like gender inclusion is becoming a common phrase that is well accepted and starting to gain a lot of traction, because that's also part of where the systemic change can come from. Diversity in itself is important for economic growth, but I believe that enabling more women to be active in the economy is also part of where the solution lies. And I think you've witnessed that for yourself this afternoon, Paul.
Gina, both this afternoon and this morning, and Michael Murray, who's on the call somewhere, I think in Cape Town, we spent an hour this morning, an unbelievable hour, discussing gender inclusion in the context of the Stock Exchange of Thailand, with the UNDP team in Bangkok, and it was a remarkable conversation. So I'm now linking South Africa with Bangkok, but then we're now going to jump north to Kenya. I think if Faith is with us, Michael, I've lost Faith's name. I don't know if there's been a technical issue. Faith, are you there? Technical issue.
Seems to have dropped off, Paul.
Okay. Look, thank you for that. Let me hover for a second. we've jumped from India to South Africa, Brazil, and then back to South Africa. And look, we will make sure that anyone participating in the event gets some sort of input and feed in what Faith Nakroti would have been telling us about Mwezi Solar Limited. But we've rescued a few minutes for Q&A, which is such a luxury, I think, in these times. What's the common threads here? It's clearly purpose. We can feel capital wanting to move towards both return as ever and social impact, that there are new opportunities open up, all of those things. Are we in an echo chamber? Because we're all involved in sustainability, and because we know what the Sustainable Development Goals are, which the vast majority of human beings, I think, if you said the acronym SDGs to them, they would not know. You know, no disrespect to anyone. It's a sort of technocratic language we're trying to download. I feel a tremendous sort of feeling of hope, but it's back to the scale issue. If you think of the deep pools of capital in the G7, in the G20, right? And also the domestic deepening pools of capital in the middle income and less developed countries, right? Those pools of capital, we have to move from timid capital to bold capital in the context of blended. I think we have to do that. But let me come back and ask you all a question, which we've got a good solid 9 minutes, so we can address it. The danger of the sustainability echo chamber. Is this really happening now with asset owners? Is it happening with the, beyond the Norwegian government fund and beyond the funds, CalPERS, and people who really profess sustainability and responsible investment? And we could go on. Incredible work by your colleague, John Oliphant at the Government Employees Pension Fund in South Africa to establish 4 pillars all those years ago around, human capital, access to energy, all of those things. Fantastic. Is it real? That's my question. Is it real? And I'm going to go back to Achana, who I see as an investor's investor who's an investor and always has been an investor. So Achana, if you don't mind me, is it real? Are we going to get scale, and are we going to make a difference? And this is asked 2 days after the G20 in New York, and it's the finance ministers endorsed the G20's Sustainable Finance Roadmap, which is a 68-page document with far too many acronyms in. So again, I ask the question to all of you, is this real? Achana, and then I'll come back to Karine and Teresa and Dinao. And if Faith magically reappears, we'll ask her to tell us about Mwezi. Achana, is it real?
So thanks, Paul. I would say that if you look at the common theme that came out of this conversation, that all of us already inherently know that this is more of an economic concept than so much about calling it anything else, right? So if it is an economic concept, then from an investor lens, big investor, small investor, it's real. And if you take the example of either of the 3 countries that we are talking about, we have enough examples to show that it can be done at scale. It's a matter of getting everybody, to that a center of the road approach, right? Because you have your traditional impact investors who are DFIs, etc., who think about impact as being, like really granular, measurable, and probably not applicable to all sectors of the economy. Whereas, and then you have, the larger investors who think about it essentially over, not in the recent years, but I'd say over the last 20 years, more as, is it a check in the box, right? That do they do that? Yes or no? Okay, we don't need to go further than that, right? You have to come to the middle, which is that it's no longer about, just some sectors that are amenable to impact, which is the DFI sort of lens. And also from the other lens, that it's not only about checking the box. If you come to that middle, then there's scale.
Chana, thank you. And look, if we can be flexible, but I see Faith is back from either Kisumu or Nairobi. So I will, we've got 5 minutes left, 6 minutes left of this session, but if we can get Faith on, so I can introduce and just reference the Mwezi story, which is a story of from 8 years to serving with a last mile distribution model, over 250,000 farmers and fishing people in and around Lake Victoria. Faith, are you there? I'm having one of those moderators, the moderator devils are around me. So Archana, we'll see if we can get Faith for the last few minutes. But Archana, I'm going to go to Karine now. And again, it's that point. From Archana, firm tick. Yes, it is real because it's economic, gets investors focused. Karine.
Hi, Paul. Yes, I think it's absolutely real. All of the large institutions that I work with are embedding this very deeply in their approach to portfolio, in their approach to lending habits, et cetera, et cetera. And I think that we now have got that kind of entrenched system that is going to deliver it. I think there is still a lot to be done to stop the financial sector thinking risk first and get them to understand the scale of the opportunity in turning it around and looking at the enormous need across Africa, just for example, for housing, for all kinds of economic development initiatives. And if I think about Teresa's presentation or comments, the one thing that we need more of is financial innovation, the innovation in how do you help the poor to pay for services. They're usually willing to pay, but it's at a different scale and at a different rate. And if we have more innovation at that level, we will unlock even more opportunity.
Karine, really, really important, and an important linkage there for sure. I would also add, you know, it's the timing around risk, right? I mean, Dino mentioned the Arab Spring in South Africa, or the risk of that. Without addressing the social issues, there is immense challenges of systemic risks evolving over the long time, and it can't all be about short-term risk. So I'm seeing Faith phase in and out. I'm not sure if she can hear me or vice versa. But Teresa, I mean, Karine very not kindly, picked up on some of your points in terms of those issues, about that idea of financial innovation to empower the last mile and those vulnerable communities. Yeah, is it real? I'll come back to that original question.
You're on mute, Teresa.
Yeah, I think that's, yes, it's real. Depends on the leadership and the behavior of the company to understanding the reality that the world is changing, and that the organization needed to play a different role or an additional role if we want to have a long-term sustainability returns. So it's important that we start to thinking about the diversity, the innovation, to be connected with the other companies, to find out ways to serve a population that depends on that service, and but in a different way. So I do believe, and the more and more I'm seeing the organizations and the leadership being aware of that, and also the financial community. When I spent one day talking to a multilateral bank to explain which are our diversity and social programs, to use that interview as a part of the checking box to analyze the risk, to provide the credit for the company, I'm completely sure that this is the right way, and as a no return way in my perspective. So the companies and the organization and the leadership of this organization needed to be connected with this world that demands more from the organization than only the core business. We needed to go and capture the social license to operate a company that has contracts of 35 years of concession. So we needed to move in that way. And I think that more and more we see the investors and also leaderships and organization connected to this agenda. So yes, I do believe that is possible.
Teresa, thank you. I'm going back to Dee now to finish and close this panel with words of massive wisdom. So Dee, now that's a challenge. But look, just one comment. I've got to know you and all of you over an extended period of time. In some cases, I think each of you has managed to do the hardest thing within different companies, which is to create a culture where the idea of sustainability is not seen as something at the end of the corridor, but it's actually seen in the C-suite, in the board, and trickling down, and it has to be in the DNA of the companies. I think that's the hardest thing to do. So more power to all of your arms, Achana, Karine, Teresa, and Dina, over to you for exponential wisdom.
Thanks, Paul. It definitely is real. I think, just to the point of risk, the organization that I was making an example of had on average a bad debts ratio of less than 0.5%. At its peak during COVID, when it had to write off some loans, the highest bad debts ratio it had was 1%. I'd like to count how many financial institutions can achieve those kind of metrics. So I think what we need for sustainability to really be mainstreamed a lot more is scale. If you look at South Africa, just in the past week, we've had more than 10 companies having to delist due to size and a number of reasons. So we need a new generation of businesses that I believe are going to come out of us scaling the sustainability, who are then going to offer the traditional capital markets, an investment opportunity through the paths that they are used to. And I think, one of the characters of sustainability is resilience. If you look at a lot of those businesses, they've been built over many, many years by people who truly believe in them, that can spend the time to prove the business case. And I believe that as long as we play all of us along that continuum, right from early stage all the way until the businesses are ready to be listed, we're going to really help to mainstream sustainability and therefore mainstream capital into sustainable businesses. So I believe it's truly possible, and a lot of that work has already been ongoing. I think we can continue to scale it up. Thanks for this opportunity.
So Nodina, Achana, Teresa, Karine, I know Faith tried to get on. Look, thank you for your time. Wonderful, a wonderful panel. I was viewing the backgrounds, and Dina, yours is impressive, and Karine, yours is, and Teresa. But I give the prize to Achana for that wonderful seat. Okay, yeah. in terms of the background. So look, all joking aside, thank you for a wonderful session. Some really big takeaways, positive message. It is real, and we're going to move on to the second session now. So thank you again. Please stay with us if you can. I think that's part of the process, but we'll understand if you can't. We're going to move on to panel 2, and let me, before I go to Judge Professor Mervyn King to make the introductory comments and introduce the rest of the panel, and I'm going to move quite quickly. As part of the process I described earlier, which was the process which started with the UN in South Africa back in March 2020, we looked at different aspects of the investment chain. One of the things which became really clear is that outside of asset owners, asset managers, all the intermediaries, the role of professional services, lawyers, accountants, consultants, advisors, credit rating agencies is incredibly important in terms of the investment chain, the way it thinks, the way it moves, the way it changes. And Paul Watchman and myself, Professor Watchman and myself, over the last year and a bit have focused in and on the role of the legal community globally. And therefore, this panel is the role of the law in accelerating global impact. And we do, again, have a wonderful panel. Let me jump into it. So, Anthony, I think we can just pass over unless you want to come back in from UNCTAD and make some connecting comments. We never want to forget our UN friends. Good, we'll move ahead. So without further ado, Judge Professor Mervyn King, Chair Emeritus GRI, Chair of the IIRC, the founder and driver of the Good Governance Academy, and many other things beside. So Professor King, as ever, a delight to have you. You anchored the process over the last 18 months with Professor Watchman. What does the law have to do to make a difference in terms of accelerating global impact. Over to you for opening comments, Professor King.
All right, thank you very much, Paul, and delighted to be here with UNCTAD. I've had a long association with UNCTAD when I chaired the United Nations on Governance and Oversight, working with George Kiriakou. I want to just talk about three headings: mindset change in boards, the practice of law driving as a driver, and the capital markets as an enforcer. So mindsets. At the moment, companies, and I deal with the limited liability company, but it actually applies to all organizations. The limited liability companies around the world, because of COVID and the restrictions and the lockdowns, are in survival mode. So there's a lot of short-term thinking. But the short-term thinking needs a mindset change in itself. Because in dealing with our stakeholders, we've got to accept that during the restrictions and the lockdowns, they've suffered hardships. At the same time, the stakeholders have to appreciate that the company too has suffered and has got concerns. So what is the mindset shift? In the short term, in making business judgment calls, it's got to be done on a collaborative, integrating, and compromising mindset. We have to compromise between our stakeholders and the company likewise has to compromise with the stakeholders. So that's important, but at the same time, the law doesn't stop operating. And directors, corporate leaders, owe their duty of care to the company. And the two critical long-term issues going to the end of this century, I believe, is going to be climate change and cybersecurity. So while all of us are on this panel, and including myself, assuming we're directors of a company, we have to think short-term in this compromising manner because of the hardships and the concerns we've all suffered during this COVID period. We cannot forget our duty of care long-term for the health of the company. And that involves building into our business models sufficient of the SDGs pertinent to the business of our company to deal with climate change and cybersecurity. The risks and opportunities on the business and the business judgment calls that the informed collective mind of the board will make are very important at this time. So the law is a driver of this sustainability issue. Then the capital markets of the world. The companies around the world create financial instruments to raise capital. Might be a rights issue, it could be the issuing of a bond. It goes into the capital markets of the world. The asset owners and asset managers are not the asset owners and asset managers of yesterday. They themselves are driven by their beneficiaries. And they have to think of the long-term health, the longevity of the company in which they're investing their beneficiaries' money and the equity of that company. So if you and I, Paul, are directors of a capital markets company, and there's another company from, let's say, Nairobi, who issues a bond with a certain coupon, you and I will ensure that there's a financial due diligence done, but we'll also today do an ESG due diligence. We look at how the company has made its money. We will look at the impacts of its activities and the product itself when it goes out into society and the other outputs such as waste. How's the company dealt with this? Then from a social point of view, we only have to talk about the pandemic, and you'll see how health and safety issues inside a company have become important for the financier and capital markets of, let's say, a rights issue. Have to look to make sure that a company has dealt with the social issues. And this also includes its supply chain, because if one of the service providers or major suppliers is, for example, breaching human rights by employing child labor, and that becomes known the next day, let's assume we listed on the London Stock Exchange, we could lose 40% of our market capitalization. So it's absolutely critical. Then the G is also important. And it's extraordinary to me that the IASB, International Accounting Standards Board, starting to work in 2017, and maybe that's the reason, because they were working in an atmosphere of competitiveness in the ESG space, where framework providers and standard setters saw themselves as competitors. And in March 2019, at a physical conference in those days, I said it was a social outrage that this was happening in the ESG space when they were dealing with public interest issues and having a common public good outcome, namely to make corporate reporting more informed so that the user can make informed judgment calls. But so we, as directors of the capital markets company, will do that due diligence and look at how the company is being governed as well. Is it actually creating value in a sustainable manner? Is it adding value to society? Not only enterprise value, adding value to the company itself, but what about value to society? And then the question of the environment is also very important. What are the impacts it's having on the environment? Has it got an ethical culture and has it got effective leadership? By that it means that has its corporate leaders accepted that they are the conscience of an incapacitated person, namely the limited liability company, which is artificial, has no heart, mind, soul, or capacity. And are there adequate and effective controls inside the company? And then where the company operates, let's say in Nairobi, that we actually test in the community. That is there trust and confidence in this company by the community in which the company acts? So the capital markets become an enforcer of ESG issues and impact investing. And so the great asset owners like Kelpers, Norwegian Pension Fund, Norwegian Oil Fund, BlackRock are looking at these issues. And they're looking at, you can call it impact investing or give it any, the nomenclature carries on. I prefer saying that what has happened in the world is that sustainability reporting has become of equal importance, if not greater importance, than financial reporting. And what is common cause with all the task teams now working on creating an international sustainability standards board, which are going to be enterprise value driven. So still room for reporting on the other side of the sustainability coin about impacts and the impact of the product on society and the environment. But one thing is common cause, that the financial and the so-called non-financial have to be connected. And so what we call integrated reporting at the IRC, at the VRF, is becoming more and more important. Now we have the ISSB under the IFRS. We have corporate sustainability reporting directives in the EU. Are we, heaven forbid, developing two parallel systems in the sustainability reporting mode? Well, one thing that's going to connect them both is this overarching framework which connects the financial to the non-financial. Equally, it will apply in the United States, where the SEC is asking questions on ESG issues, and hopefully they won't create sustainability reporting standards very different from the ISSB and or the CSRDs. Thank you, Paul.
Professor King, tour de force as ever. You swept right across it in an incredible way and set up the panel. It's just it's the challenge, and as you say, whether it's the role of capital markets as enforcer or it's the law in terms of the dynamism there. There's a grand challenge here, but things are changing. And I pass over, and again, I thank you for your leadership as ever in terms of the process over the last 18 months as we looked at business beyond COVID and the investment community and the legal community. I'm now going to go to Professor Watchman, who was your, I was going to say sparring partner. I don't know if that's correct. No, it was a double shoe shuffle. Paul, over to you.
Yeah. At least you didn't say a tag team, so I'm grateful for that. It's an honor. It's an absolute honor again to be with Professor Mervyn King, who, as author of the King Reports and also his leadership for many, many years in this area, has brought us to where we are today. And of course, Paul, I have to acknowledge your critical role in creating the ESG acronym, which has sustained us over many years, but has been, I think, misunderstood and misinterpreted from time to time. Also, for the other panel members, it's wonderful to be with pioneering lawyers and people working in this area and really making a difference, whether it be in banking or law. I decided today, when I was thinking about this, that I needed to expand my remit quite a bit, but I will try to focus on just two things. One is I want to talk about the rule of law, and the role of lawyers and law firms. And when I say lawyers and law firms, I want to include in-house counsel, general counsel, in-house lawyers, and the judiciary, because I think it's often overlooked that judges like Judge King and the UK Supreme Court and the Netherlands courts are making great sweeping changes to jurisprudence as we used to know it. It's almost like we're back in the 1930s, and the unfortunate victim of a decomposed snail changed the entire legal system and the question of legal liabilities. So the first thing I'd like to say is we are looking at something which stuttered into life. In 2004, 2005, when we did the Fresh Rules report, we were quickly overtaken by the financial crisis. And that crisis had a very long hangover. And trying to get governments and companies to focus on anything but the survival of the worldwide financial system was difficult. But you see, if you look at, I always look at the EU, because the EU was quite slow to begin with. I think if you look back to 2015-16, there wasn't many laws that really were addressed to the ESG issues. But now we're having an acceleration, and that acceleration is not only in Europe, but in Asia, in Africa, and in the United States. And what I can see from that is that there are wholesale changes going on in laws, in legislation, and in the interpretation of legislation. The passing of laws is easy. The weakest link in the legal system is the enforcement of laws. And I thought I would give an example based on the Equality Act of 1970 and the Sex Discrimination Act of 1975. Now, I don't know how many women, Paul, you have in the looking in now, but could they metaphorically all stand up if they thought in 1970 they were delivered equality, gender equality, or in 1976 we eliminated sexual discrimination? Because the importance of laws is it creates standards, it creates aspirations, and ways to get to those aspirations are very, very important. It's also important to look at things on a global basis, because laws differ from country to country and continent to continent. And what I would say is that although on the one hand, the EU can point to laws relating to supply chains and disclosure and carbon footprints, equally China has quite strong laws in relation to environment, which is often forgotten. So on the ESG, in China, the S may not be anywhere, but the E is, and you can see that balance. I would also like to remind us that there are such things as hard laws and soft laws, and it gets complicated because you have hard soft laws and soft hard laws. And the best example I can think of a soft hard law is the United Nations General Principles on Business and Human Rights, which now seems to have been accepted as an international standard, whereas with areas like air pollution and water pollution, it is a hard law, but a very softly regulated law by the courts and by the various regulators. So the second thing to say is it's not just about laws, it's about lawyers. And it's about a new breed of lawyers, and lawyers who are looking at ESG and who have lived with ESG. And I can see changes, important changes. Ben's firm, Ben McHugh's firm, is the only firm I know that has explicitly nailed its flag to the mast of ESG and is pushing that through the culture of the firm. There are other firms who are doing great things, Linklaters, Clifford Chance, etc. I can see leadership, real leadership, pushing that forward. But I'd like to just focus on a few different groups. The first group I want to focus is on general counsel and in-house lawyers. They are in a pivotal and critical position to influence both their companies in terms of the purpose of the company and the law firms who deliver legal services. And it's noteworthy that in a lot of procurement for legal services contracts now, we can see requirements in relation to diversity and inclusion, requirements in terms of non-harassment, requirements in terms of working conditions. It shouldn't need said, but the fact that Law Care, the charity set up to provide an outlet for young lawyers and older lawyers suffering from mental stress, perhaps because of long hours and unsustainable billable targets, exists. And clients shouldn't have to say that, but a lot of general counsel are taking that on, and there's bodies like Shift, and there's bodies like the Chancery Lane project, where they're producing and sharing precedents and practices and policies, which I think is very important. Law firms, I have been impressed by Ben's firm. I've also been impressed by some of the changes that I'm aware of within law firms. And it's quite strange that I get regular phone calls now from senior partners in the Magic Circle and international law firms ask me for guidance. But my guidance is usually the same thing. It's stop greenwashing and learn some law. But that guidance is taken on sometimes, but not others. Third group, regulators. One of the real problems that we've had over the years is in terms of regulators not being forceful enough in their regulation. And we can see that in the financial sector, where with insider trading being made a crime in England under Margaret Thatcher in the 1980s, was not made a crime in Switzerland until very, very recently. But you have, even where it's made a crime, you have financial irregularities and under enforcement. And you can see that recently with the Financial Conduct Authority, the SEC, and the Financial Reporting Council. So regulators are an issue, but hopefully that's changing. And the last, and I think this has been wholly underestimated, judges like Mervyn King, we know, look at the law in an imaginative way and against certain standards. But we're seeing the UK Supreme Court, not both under Lady Hale and Lord Reid, pushing on things like the responsibility of responsibility of European parent companies such as Shell for their African subsidiaries. And that's a really important change. We can see in the various decisions coming out of other courts in Holland, in Germany, in the Constitutional Court, etc., an awareness of the importance of ESG factors and a development of what I would call intergenerational justice. Now, intergenerational justice is quite a new concept. Judges used to reject the idea that you could protect the environment, full stop, trees had no rights, or protect the environment for future generations. Now, that is changing. I just want to say in conclusion, because some people think that I sit all day listening to Leonard Cohen, which is only partly true. And he has a song called You Want It Darker. And I just thought that might be the one to end up. I am very optimistic for the first time in my life, or for not first time in my life, but for a long time, about ESG, about lawyers, about law firms. If people like Ben can show us the way to fund, make money, and address things, if Clifford Chance are establishing a global leadership scheme, if other law firms who are greenwashing put away the paints, put away the pastels. As I said to Slaughter May some time ago, you can send all your partners off to Oxford for 6 weeks, but they won't come back as a pre-Raphaelite artist. They'll probably leave the cranes on the train and they'll forget everything they've been taught. So in conclusion, we are at a stage where we can see Larry Fink coming out and saying, we have to change. And we have Biden replacing Trump. We've got so much optimism coming out of the SEC and others that I think that we're on the cusp of something very important. But the role of lawyers and laws and law firms is to accelerate that change. And then, Paul, what you and Judge King did during the pandemic was vital, because we talked about impacts on communities, on economies, on businesses, and on the future prosperity of the planet. And I think what I learned from that in doing all these seminars over that 8-month period, or webinars, was just how receptive people were and how they were changing. I will stop there. I've probably overrun, sorry.
Paul, that's we're perfect for time. That's a double tour de force. I mean, we've come at the law in a global context, massive change, the reality of capital markets. And now we're going to segue the session with views from, I'm going to say, Hong Kong Special Administrative Region and Greater China, Ben. And then we've got a treat, and we've got Jennifer Mabaluto, partner with Clifford Chance, who I believe has just escaped from the Lake District in the UK, which is a good thing.
Yes, that's right.
But you have double coverage both in London and in Nairobi. Well, I think you herald from Kenya. Is that correct? Yeah,
that's right. That's right.
Good, Jennifer. So you'll be first on deck. We've got Ben. Ben, I don't even know what time it is, but you look very good. You look awake, and that's a wonderful thing.
Thank you. I spared you my pajamas.
I like your pajamas. They're very nice.
And then we're going to flow from two lawyers to, I mean, a real investor's investor, the ultimate banker, the ultimate investor in Brazil, in my mind, who had DNA, his DNA hardwired with sustainability since I've known him, which is well over 20 years now. So I think we've got a treat here. Less I say, the better. But let's go, Jennifer, in the context of what you've heard from Judge Professor King, Paul Watchman, tremendous changes happening in law, or potential changes, disruption. Like perhaps, I know Paul's never seen it in the last few generations. What is Clifford Chance seeing? I mean, I know you have a global board on ESG. Your colleague Jeroen Urhand is the chair of that. Let's connect those changes to what you see in the emerging markets. And perhaps, I don't know if you want to focus on East Africa or more broadly, up to you. What are you seeing? What are you feeling? What are the challenges? What are the opportunities? Jennifer, the floor is yours.
Thank you so much for having me. And I have to say, I'm already so inspired by what I've heard tonight from both professors. It's my first time, sharing this platform with you, and I'm really, really honored and really grateful for the work that you're doing in this space. And I'm excited about the conversation we're about to have. I always have to start with a disclaimer, Paul, in that, whenever I come into these discussions, I'm obviously speaking for Clifford Chance, but I'm also Jen, the Kenyan, who grew up in communities where, the priorities as we know them are very different from the priorities as I see them, sitting here in London. So I always have to issue that health warning that, some of the views are kind of deeply personal. And actually, it's one of the issues we come across when we look at ESG is one of the learnings that we have is that every organization and every country is undergoing its own sustainability journey. And so whereas we have issues that are global, like climate change, or issues that are shared, different communities are at different levels. And I think that's the first point that I really wanted to highlight, really both in terms of, the insights we get from our work, but my own personal experience. I completely agree with, with Judge Professor Mervyn King that, climate change and cybersecurity are certainly going to be the big, they are the agenda and will continue to be the big global agendas when it comes to sustainability. But at the same time, there are people I personally know that still have to access basic needs like food and healthcare, etc. And this has really been brought to light by the pandemic, where we see huge variance, not in terms of the economic impact that COVID has had in different regions, but also when it comes to response. Vaccination uptake is very, very low in Africa and certainly in East Africa. Part of what I do is I sit on the board of a charity called AMREF, here in the UK. And, for those in the audience that don't know, AMREF is one of the largest African headquarters healthcare charities. And we work mainly in the sort of educating health workers and working in collaboration with communities across Africa in addressing, day-to-day healthcare challenges. And of course, with the pandemic, we have seen the challenges when it comes to vaccination. African governments are working hard to make vaccines available, but most people don't want to take up these vaccines. What do we do about that? To me, as Jen, that's a real issue. It's an emergency, it's a priority as much as climate change is. And so when I look back to the work that we do with our clients, it will range from, advising Pfizer on its agreement with BioNTech to produce a vaccine, but also working very closely with local NGOs and communities in East Africa to address their day-to-day changes. And, I'm very aware that this panel is talking about the role of lawyers in accelerating this sustainable change that we want to see. But I would like to suggest that it goes beyond the rule of law. It goes beyond talking about the law and the practice of law. I think it also extends to being very much in tune with the communities in which our clients operate, because these are the key stakeholders. When we talk about cybersecurity, I think about the global bank that we're advising on its, on the ethics of artificial intelligence, but I'm also looking at that little, child who's exposed to online harm. How do we link the two together as lawyers? And we're very, very uniquely positioned to bring those two, because I believe that fundamentally we are humans before we are lawyers. We live in families and communities before we are lawyers, and then we have the insights that we get from the work that we do. I think there is a key role there for lawyers in bringing the two together and enhancing the level of that conversation. Professor Mervyn King talked about mindset. And that really resonated with me, because again, one of the things that we have been working very closely with our clients is around inclusion. Inclusion is important in this sustainability debate, because it is important that we don't silence any voices, that all opinions are brought to the table, right from the boardroom to governments, to regulators. It is important to have diversity. And so we're working very, very closely with our clients in kind of helping them, put in place policies, in the wake of the Black Lives Matter movement, put in place policies that actually drive that systemic change within organizations. And we're doing it ourselves within our own organization. Last year, I think we were the first global law firm to announce annual targets when it comes to ethnicity, and as well as, we also announced LGBTQI targets as well. And the reason why we announced these targets is because we believe that we need to have metrics against which we measure ourselves. It's not enough to say there isn't enough diversity in the pipeline. We have to invest in social mobility programs that encourage, children from diverse communities to come within the education system and have opportunities within the workplace in order to create that pipeline that we need. And we think that having metrics is a good way to help us have that ambition. So that's another area I think that we've been very, very focused on. The third point I wanted to highlight is around just transition. And I think there was a question around, as a global law firm, we're advising clients across the broad spectrum. We act for energy companies, we act for human rights organizations, we advise banks and financial investors. How do we align these ESG values in a way that is consistent with our own values as a law firm, with our own values as an industry? And I have to say, I don't think we found the silver bullet. I think this is an ongoing conversation. I think it was Professor Paul Watchman that talked about not forgetting the judiciary, not forgetting the regulators. I think it is so important to have the cross-industry debate. And this is one area where, as a law firm, again, we've been very, very heavily involved. So we support an organization called Advocates for A4ID, Advocates for International Development. And this organization brings together legal minds in the UK. So other partners, other law firms within the UK are part of this. And we work very closely with law societies in Africa and other NGOs to build the capacity for legal services. So one area that Clifford Chance, one of the areas that we champion as a firm is the area of business and human rights. And we have had fantastic discussions with law societies and businesses and in-house counsel in Kenya, in Rwanda, in Tanzania, and have worked with some of the leading organizations in that region to really build a code for business and human rights. And I think collaboration across the legal industry and then across sectors is super important. I just want to finish with the point I made earlier around making sure we include everyone in this sustainability debate. I believe as lawyers, and certainly as a global law firm, the global footprint that we have really puts us in a unique position to almost be the sober voice in this conversation where you have divergent views. We have insights from developing countries and we have insights from developed economies that we can really use to moderate this discussion in order to ensure that as we tackle the just transition, as we work as a global community to meet these SDGs, we're bringing everyone along. And that is something that is personally very important to me.
Jennifer, wonderful. And let me bounce a question straight into you before we go to Ben, and perhaps a brief answer.
Yes.
And it reflects a conversation Paul Watchman and myself had yesterday with a really interesting investor, former CIO of State Street, going back a long time. But he made a point around disruption. And Paul picked it up in the context of the disruption of the legal world. And this idea that you see waves of disruption. And one of the references was Wachtell Lipton being created as a company in 1965 with a handshake and no partnership agreement. And what the thrust of the conversation was that ESG is creating disruption, and that as major law firms, whether Magic Circle or whether White Shoe or whether International or whether Specialist, right, that it is such a period of change, unless the internal culture can change and supply demand you're seeing from big clients, whether that's investors or mining companies or large corporations, that we're seeing disruption of the legal world, which we haven't seen for a long time. Do you agree with that? And how, briefly, would you agree with that? And do you think, is Clifford Chance winning in the culture change in terms of what you need to do for the new environment? It's not a fair question.
No, but I completely agree. I think that we have to walk the talk. It is virtually impossible to be able to lead our clients, businesses through their ESG journey if we don't embed ESG within our own culture. You know, to the question whether do we think we're winning, I certainly think that we are making huge progress in this space. As you mentioned earlier, we do have a global ESG board, and that is just a leadership group that brings together really a body of knowledge across different regions on this issue. And you know, the purpose of it is really to gather know-how, insights, experiences across the board, embed that within our own business, and really deploy that in our day-to-day conversations with clients.
Jennifer, listen, thank you for participating. Really appreciate it. And
It's a
also
pleasure.
the fact that you ran back from the Lake District for this session. So that's marvelous. I'm
It's
going
my
straight
pleasure.
to Ben, forgive me, but I'm just going to say Mr. Disruption himself. And that is maybe going too far, but you know, as a former tabloid journalist, you've got to forgive me. So Ben, delighted to have Ben McHugh with us. And forgive me if the pronunciation wrong. It's a wonderful name. I'd love to find the history of that at some point. But you've created a law firm under your own name in Hong Kong in the Special Administrative Region, and I guess looking at Hong Kong and Greater China perhaps, and the region. But it's defined in some ways, isn't it, by climate change and ESG and these issues. And you want to be the first fully, truly integrated law firm, but also super profitable. So look, Ben, how are you seeing it? And the floor is yours for the next 8-9 minutes or so.
Thank you so much. And, you know, I echo Jennifer's comments about how what an honor it is to be sharing the floor with everybody today. One of the advantages, I suppose, of having an almost unpronounceable name is that everyone can remember the name of my firm, because it's that unpronounceable one, Mc something or another. So,
how do you pronounce it?
It's McQuay.
Okay.
Yes, and you think it's tough where you are. It's even tougher here in China. But actually, I feel compelled just to let you know that it's sort of Hong Kong Law Society rules dictate that one can only establish a firm in your own name. And so it wouldn't necessarily be my first choice of firm name, but I don't have an option. So that's what it is. Thank you very much for you know, the opportunity to sort of to share with you today. I mean, let me give you just a little bit of context about my firm. You know, I've been a corporate lawyer, transactional lawyer, all my working life, and deeply involved in sustainability here in Hong Kong, mainland China, and also at the UN through the FC4S network for some years now. And I mention this because I think people need to know that, you know, my firm is new, but it's also the result of quite a lot of careful planning over at least the last 2 years. And I launched it earlier this year because, in part, I felt we had finally figured out how to combine law and ESG in a sort of coherent way. And also because, to me, it made fundamentally good business sense to do so. So as you may know, I decided to go sort of all the way, and I actually developed what I think is a new law firm business model that places sustainability really at the heart of everything that we do, really at the heart of the business plan. What that means is that we only take on mandates that are aligned with the UN Sustainable Development Goals, and against which we've also developed a methodology to ensure that we are accountable to our commitments. And as Jennifer pointed out, you know, the flip side of ESG commitment as a law firm is that we have to integrate ESG into our internal operations, and we've done that through various measures, including our decarbonization strategy, etc. We're still very new. We're very much a work in progress. Certainly not perfect, but it's been well thought out. And I think this is important because, you know, we mean business. I have no intention of being a sort of a proof of concept or an interesting idea. You know, our mission is to build a serious and sizable corporate commercial law firm. a firm that can attract, the best talent, high quality clients, legal work. Of course, we need to be highly profitable to be competitive, but we also are going to be a firm that chooses to only practice law in a way that's aligned with our clearly stated ESG values, and that does make us different. Acceleration is key, and it's been mentioned, numerous times during this panel session and the previous one. And acceleration is certainly our objective, but to achieve the levels that we think we're capable of, we need to grow, and we need to grow quickly. At this stage, I'd say that we're raising awareness. I'm sure we're raising a few eyebrows as well. And hopefully we're starting to inspire, some other lawyers to perhaps rethink how and why they practice lawyer, and hopefully, a growing universe of clients who are now sort of encouraged to rethink, how and why they choose their counsels. And so I think, the bottom line for us is that, when we see firms like mine winning, major mandates, attracting high caliber lawyers because of our commitments to ESG and because of the values that we nailed to the mast, that's when I think we'll see, perhaps more rapid adoption of ESG within the profession, and hopefully real acceleration as a result. Whether that makes us, if that makes us, disruptors, then so be it. I'm never quite sure whether disruption is a sort of a positive or a negative, but we think that our clients increasingly are going to need a different kind of law firm, a different kind of service offering to support their ESG transitions, and we're out to plant a flag to claim a bit of that, as much of that action as we can.
Ben, let me jump in with a question, which is,
please,
and forgive me, Professor King, if I'm paraphrasing incorrectly. I'm sure you'll correct me. But one of the points I took from Mervyn was that if you look at the last 10 years, there's at times been within one branch of professional services a somewhat unseemly, not argument, but an unseemly focus on the commercial potential that comes with integrated reporting and the evolution of ESG and the ownership of framework and disclosures. Professor King used the word outrage in terms of how what should be a public good was sacrificed, right? In the context of ESG and some of the work I've been doing with Professor Watchman over the last year and a bit, there appears to be facets of unseemly competition, perhaps even unseemly claims around ESG capabilities within law firms, where there is a very inherent contradiction, from that representation of, it might be, egregious companies in the fossil fuel sector who won't reform, but at the same time, a law company is professing, ESG credentials. I'm being simplistic. My question to you, Ben, is that when you look at the law community around you, let's say globally or regionally, and you look at this sudden move to ESG, does that cause you disquiet in terms of, how you're competing and who you're competing against? I mean, you've nailed your flag to the mast, right? But there are the deep-pocketed and strong legal firms out there who are moving into the space. How are you going to, as a new business, deal with that?
Well, it's we're probably all, we all have unique qualities that support our sort of respect. I say we, big firms, small firms, we all have our sort of unique qualities and offerings. I spoke fairly recently with Jeroen about some of the things he's been working on at Clifford Chance, just for example, and just because Jennifer's here. And I think that was probably, he's probably more forward thinking, and therefore his firm is probably more forward thinking than some of the other big firms. But, I think we have to accept the fact that, ESG is new to the legal profession. And of course, there are some, notable exceptions, but most law firms and most lawyers are still just figuring this out. They're figuring out what it means to them, what it means to their future business, what it means to their client's business. And one of the first things that we do, I suppose almost instinctively, particularly given, as we all know, law firms aren't always very progressive when it comes to sort of staying ahead of the curve. But so inevitably we see, what we might fairly or unfairly refer to as greenwashing. It's a retooling of a practice area or an individual within a firm, and rebranding, airbrushing, whatever we may want to call it. But the important thing is that firms, big and small, realize that ESG, sustainability, SDG alignment, whatever the focus is, brings into the firm, into their kind of the realm of their practice, a new and very broad set of disciplines, and it's no easier or achievable for a lawyer to become an ESG expert, any more so than an ESG expert to become a lawyer overnight. And so we all have to sort of invest in talent. We all have to invest in upskilling, and of course resist as best we can the urge to greenwash. So for me, we have the confidence. We have to be, I guess, committed to our values and confident that we're sort of on the right track and doing the right thing. We need to be confident that that we have the skills. We have the skills on board to serve the clients across this sort of intersection, as it were, of law and ESG, and there's no getting around that. And so we all law firms in a way compete in. We're all competing for client work. I wouldn't consider my firm a sort of natural competitor of Clifford Chance. What we're saying is that, we can support clients whose needs combine law and ESG. Sorry, Paul,
No, it's fine. Listen, I want to jump in with a brief question and maybe a brief reply, which is much more about basic business. The whole thrust of this panel was around, emerging market impact at scale. Is business good? Do you see whether it's in the climate vein or it's in, supply chains, or it's related perhaps to modern slavery, all of those different things? Is business good? And do you see an uptick from the corporates or financial market players in Hong Kong, but obviously also in the region that you serve? How what's your radar? What's your antennae? Is it building?
Yeah. Well, we're a new business, very new business. So we look ahead for the next month and 3 months and 6 months, and can we keep the lights on and everyone paid and fed? And so far so good. In this part of the world, then climate on the E is very much the sort of primary focus. There's a huge need for green and sustainable finance to support the environmental. To support the sort of climate change, the fight and battle against climate change. So we've been advocating, with different hats on, to the financial services sector for really since 2015 in earnest. And I think that sector in this part of the world is they kind of, with the program, they know what's happening. Many are quite advanced in their thinking and transformation. Other industries and sectors are following suit. We see, carbon markets forming in mainland China, and Hong Kong will develop sort of trading markets to support that. We see a lot of policy changes and positive policy commitments in the form of net zero, and so the list goes on. So business is currently pretty good. I would say the outlook is, there's every reason to be highly optimistic. But ask me the same question next year if you invite me back. We're having to sell a concept, and people are very supportive and they love the idea of the firm and the way that we've committed to ESG. But of course, you know, generating that first dollar of new client business that's the hardest money you ever earn. And that takes time.
As someone who left the UN in 2012 to set up a business, you're very much talking my language. It's still hard to generate that dollar. But look, thank you very much indeed. You can advise me. I don't know whether it's best to go west to Brazil or east to Brazil. What's quicker?
I'd go west.
All right, Louise, we're coming to you in Sao Paulo. We're stopping in Schiphol because they have better beer than Frankfurt, and then we'll arrive in Brazil. Look, you've been incredibly patient, and Louise, the reason I wanted to finish the overall panel with you was, I mean, you've been deep in the markets for decades, right? As a banker, as an investor, as you know, the head of private equity for Brookfields in Sao Paulo. You did what I would term really audacious and really real deals with risk appetite. In terms of that whole process, those decades of experience, you will have commissioned lawyers, you will have used lawyers, you will have tested lawyers. What has been your experience? And has it been positive? Do you see the change in terms of law on the ESG side is happening in Brazil? Give us a market perspective, really.
Yeah, absolutely. I think we need to work together with the lawyers. I think lawyers are changing, as was mentioned in this panel. The role of the lawyers will change, integrating ESG in their business, on the day-to-day business. And the role of bankers also are changing. The financiers also are changing. So I see a big evolution in working together with the lawyers, especially now in talking with the SMEs companies, preparing these companies for the new future in terms of shareholders agreement that they will have it. So we are discussing here today in Brazil, talking with the big number of SMEs companies that we are trying to put ESG in their business. So one of the things to do is to organize the company in terms of corporate governance, in terms of legal structure as well, because some of the companies, they're totally informal. So we need to bring to another reality. So we need the lawyers, we need Clifford Chance, we need the company of Ben in the future to help those companies to be into another reality, because without having the legal support in the right social framework of the company, they cannot have access to finance. They don't have access to capital markets. They will be forgotten in terms of a reality. And we need those companies to deep penetrate ESG to the base of the pyramid. And it's not only the big companies, we need the small companies as well.
And Louise, I won't go too far, and I won't go deep into the detail, but I know you were involved in as a private equity player in the deal which lifted what is now BRK Ambiental out of the Odenbrecht, where that apart from the investment deal, lifting a good valid business out of an entity which had intense, I guess, reputational and operational issues. You'll excuse my language, but that was high risk appetite. But in terms of the legal process in and around that in Brazil, and doing that,
I think it was very challenging to buy a company, pulling out this company from an organization that was deep involved with this Lava Jato scheme, corruption that we saw in the recent past in Brazil. I think it was challenging because we were able to really isolate that company and to take it from a big organization. It was very complex process. We rely a lot on the lawyers to help us with that. Brazil didn't have anything similar on a situation of a big corruption scheme. So we mimic the Brazilian judiciary system, mimic what was done with the DOJ in the United States. So in a way, we imported, copy and paste what was done in the US, and we introduced in Brazil. And we were the first company to sign an agreement buying an organization that was doing all the negotiation with the government, plea bargain process with the government. And we got the judge, Sergio Moro, was the one that signed and gave the clearance for us to buy that company. So what that was, we were the very first organization that did that. And I remember that a lot of people in the financial market say, "Are you guys crazy now? You're buying a company that the CEO is in jail." But I think the legal framework created at that time, talking about 5 years ago, was perfect, was valid, but it was pretty much copying what was done in the United States.
And Louise, let me follow on with a writer question, and then we're just about towards the end of time. I think we can overrun for 2 or 3 minutes, or maybe 5 minutes.
Yeah.
We'll be finished by 35. I'm going to ask Professor Watchman and then Professor King, really, I guess, for final comments to close a process which has gone on for the best part of 18 months. And I will just give you a link to, you know, an ongoing effort that we're working on with the UN. But Louise, my question, I'm going to connect a dot here. Look, the first time I met you was when you were at ABN AMRO, Banco Real, in that just pre-Christmas in 2001 in Sao Paulo, where you were launching the first SRI fund in Latin America, okay? And then subsequently, the second time I met you was at a GRI gig in Amsterdam in 2001 that Professor King was speaking at, if I recall. You've always had sustainability hardwired into your DNA, right? It wasn't that you woke up one morning, but it seemed to be part of it. And you have lifted that through your banking experience and investment experience. Why? Why?
I think was we were together with a group of people with the same principles and values, and we bought a bank and we said, what else we want to do with this big platform of business? And one of the things that we decided at the time, 25 years ago, was let's transform and put the principles and values that we believe in the banking business. And sustainability was pretty much the cement that we used it in terms to project a financial organization into different routes. We were very successful. We were astonishing success that we did it. It was a transformational, let's put it this way. We really transformed the financial markets in Brazil. And we saw a lot of banks coming into our direction, not against us. So I think it was truly, we were pioneers at the time. You were there when we launched the fund 20 years ago. Exactly.
And look, as a final writer before we begin to wrap up and close, do you think the fact that Brazil in 1992 hosted UNCED, which was the UN Conference on Environment Development, the first time world leaders came together was Rio. I guess it was July 92. Did that influence you as a young business person?
Yes, because we were receiving information from all over the world, and we need a lot of information and it's changing experiences. And I think what we are doing right now is the same thing. And it's a pity that Faith was not able to speak about Mawezi, because this is a project that we believe a lot. I was caught with this idea a year ago. We are importing a technology that was used successfully in Kenya into Brazil. We are going to that technology in a very poor and very remote area of Brazil, in the middle of the Amazon jungle, named the Parrot's Beak, to bring social implementation, sanitation, education, income generation for that poor area, and something that we are using, something that was successful applied in a different part of the world, bring it into Brazil. So Mawezi will be our partners together with BRK, and it's a pity that Faith was not able to explain what is beautiful of this last mile thing that I was caught with the idea, and we discussed this during last year on the last mile approach, because we need to bring back a big portion of the society into the grid, because we lost them, unfortunately, because of the COVID-19.
Look, let me close from my standpoint. Louise, Jennifer, Ben, genuinely massive thanks for staying with us so late. Ben, what time is it there now? Okay, good. So
sorry, almost 1 a.m.
1 a.m. Ben, genuine thanks. And again, thanks, Louise, for your comments, and Jennifer. Look, let's close in this way. I'm going to pass to Paul and then to Mervyn to close. One of the things that came out of this process was what we term the Waterburg Agenda. And it's a document I'll supply again through UNCTAD. And the Waterburg Agenda is named after a province, one of, it's a combination of, it's a UNESCO biosphere in South Africa, but it also has facets of not the middle income economy that South Africa is, but of a least developed economy in terms of, poverty and pockets of poverty. And it combines that with mineral wealth. So we named the agenda from this process the Waterburg Agenda. It's something which we're working on it, and fundamentally it's about how do you connect different pools of capital, whether it's the capital markets or it's domestic capital or it's philanthropic or it's blended, to the last mile. And that very much stems from the fact we know that during COVID-19, for the devastation and tragedy that rolled out in every part of the world, that quite often those at the base of the pyramid had no resources to form any form of resilience. And this question, this massive systemic risk that the developed, the G20, the G7, the world will hold if we do not look to deploy our assets more effectively into the last mile and work with communities and work with entrepreneurs. So I'm just flagging the Waterburg Agenda as one of the outputs from this process. And with that, I'd like to go to Professor Watchman to briefly take a couple of minutes, and then to Judge Professor King to conclude what has been, in many ways, a remarkable 18 months. We will have some more outputs. We've got a legal report coming out in Q1 2022, which will look at a broader look at the role of law, the legal fraternity in the context of ESG. But I'm going to sound like a salesman. So over to you, Professor Watchman, then Judge Professor King to close. Paul?
One of the things that I do in addition to being a lawyer is I'm a historian of women's rights and also socialism. And I was thinking about the parallels between COVID-19 and the First and Second World War. I think what the pandemic has shown us is it's possible to pass laws very quickly. It's possible to change cultures very quickly. We saw the need to unwind contracts, to deal with issues like unlawful trading and insolvency. And we passed retrospective legislation. And that's something that's contrary to the rule of law and has so many difficulties, but we decided that this was the right way to go. So that's my first point, that emergencies can produce a shift, a cultural shift, what Professor King said about a mindset. We have challenged the mindset. We can see in the growth of green bonds, sustainable bonds, blue bonds, black bonds, green bonds, gold bonds, pink bonds, rainbow bonds. We can see a huge development in terms of financing, things that are good. And I have to say that to congratulate Ben and his firm, who just won an INSEAD award for doing good. That is now, which lawyer has ever had the words doing good near their title? Very few, Ben, very, very few. So congratulations to that. But look at the markets. The markets are responding. The amount of money pouring into ESG funds, the ways in which governments are changing laws and making metrics. I mean, I've worked the last year on a pro bono basis. Clifford Chance will be glad to know that when I charge a lot more than you do. But nevertheless, on my pro bono work, I've been working with the UN PSI and what we call the Net Zero Insurance Alliance, which has all the big insurance and reinsurance companies, Munich Re, Swiss Re, Hanover Re, Allianz, AXA, etc. Now, what we looked at was antitrust law. And I came to the conclusion that antitrust law in the major jurisdictions is unfit for purpose. I could go further and say something about antitrust lawyers, but that would be wrong of me, because I wouldn't like to say that they are challenged in any way and they are supreme human beings. I have got one or two that I really rate, but Sorry, I have many that I really rate. But the point I'm trying to make is the pandemic and climate change and net zero has changed so much for lawyers and lawyers, law firms and lawyers. And I'll finish by just one point. Firms like Ben are going to be the firms that people want to work for. Firms like Clifford Chance, if they change as they are changing, and I see substantial progress in Clifford Chance that I see to a lesser extent in other firms and not at all to other firms. Alan Joe of Unilever said that ESG is the hottest of hot buttons for recruitment. It's also the hottest of hot buttons for retention. So if you want to wither on the vine, don't look at your client list. Don't look at what you're doing. Don't align your values. Just continue in the old way of sending out fee notes. I think that lawyers and law firms are transitioning. They are in the cusp of becoming different. And this is why I like the idea, Paul, of a disruptive, it doesn't have to be a disruptive law firm, but let's just call about disruption in the legal profession. And let's look at these other issues in a way in which, and just finally, can I give a plug to the law students for climate accountability? Because if you want to find out which law firms are not addressing climate change, go to the F category. I think Clifford Chance, you were D. So you've got a way to go, but nevertheless, you are D, you're not F. So congratulations.
Paul, thank you for your leadership over the last 18 months, and we'll forge ahead with the Waterburg Agenda. Over to Judge Professor King to close proceedings. I don't know if Anthony is still with us and whether you want to say a few words after Professor King speaks. But Mervyn, the floor is yours to close what has been a fun process with lots of a great cast of characters over the last 18 months. Professor King.
Thank you. Yes, it has been fascinating, but I think it's underscored the principle that we no longer ask how much money has the company made. We ask how has the company made its money. Because the critical issue is the activities of the company and its outputs, which include waste and its product or service that it's rendering, go out into society and have impacts. And those impacts have outcomes. So the informed collective mind of the board is now focused on this value creation process. And in developing the IR framework, we concluded that you could, under 6 rubrics, you could actually look at the resources used by organizations, and we use the general term, organizations, and the relationships between the stakeholders and the organization or the company. And these are financial capital, manufactured, human, natural, intellectual, social, including the relationships with stakeholders. And if one thinks about it, these issues are absolutely critical. And human capital has taken on a whole new importance with the pandemic. Intellectual capital in the 4th Industrial Revolution is absolutely important. And the relationship with stakeholders is critical. So, as I've been saying since 1992, that Professor Friedman and various Supreme Courts around the world in giving judgments virtually said that the company, the limited liability company, is operating in an economic bubble. Never has. It's operated in the triple context of the economy, society, and the environment. And they have an impact on those 3 things. What we've come to learn in the 21st century, that those 3 critical dimensions in creating sustainable development have an impact on the balance sheet, on the operating performance, the cash flow, the income statement, and also the cost of capital. So we have this double materiality now, which we have to consider. And I think the Waterburg Declaration captures this concept that companies can no longer increase its bottom line, but being subsidized by society and the environment. society will just not accept it. Society has gone back to the realization that the limited liability was created by society for society. People say that society is the licensor of the company, but it is the creator of the company. And so we need to think about these things, upskill, and really integrate our thinking and no longer think in silos as we were taught. Thank you, Paul.
No, Professor King, all thanks to you. And Anthony, I'm going to pass over to you. I know your UNCTAD team have stayed beyond the witching hour in a UN sense. I believe it's 6:45 in Geneva. So please pass on our thanks to the technical team and the other supporting members. Great honor to be able to join UNCTAD World Investment Forum again. And we will take things forward. So Anthony, over to you to close. And thanks to all of the speakers, Jennifer, Louise, Ben, Professor King, Professor Watchman, Faith, we know you had technical problems, and the others who joined us. Anthony, yours to close.
Thank you very much, Paul. This conversation that you've had today is exactly the kind of conversations that we like to promote in the World Investment Forum, to really get into the technical details of how we can facilitate more and better investment in sustainable development in emerging markets in particular. So I really appreciate the contributions of everybody today, and for the participants watching. And this concludes this session of the World Investment Forum. And please do join us for other sessions tomorrow.